number of occasions, actually in the past few months, since the all-time high. As soon as it started to turn, and we could see that it was going to, I was telling people to take their profits at the high. Well, I wasn't telling anybody to follow it as a signal. I was telling people to read the VEPs and see what it was saying, and it was very heavy indications of the probabilities indicating that the price would effectively, revert to the mean and move back away from the mean and mean revert again, and so on and so forth. And would very much, be trading across a very nice fat range, which we've seen so far, about 22% from the top to the bottom, and bouncing back and forth between that high and that low. Since then, what was I telling people? I was telling you, for me, that was a good place to take profits on the higher time frames, obviously, and on lower time frames to do the same thing, keep scalping, because these would be filled with days of glorious scalping opportunities, which they have been. And of course, this would mean effectively people who are not low time frame VEPS traders would be getting wrecked left and right, not only as they usually do, but frankly, as much as they always do, because people can't handle when markets go sideways. It drives them nuts. Frankly, people can't handle when markets go up, down, or sideways, right? When it goes up, they panic because they think, oh no, it's gone up too much, I gotta sell, and they don't realize that it could go up more, or they think, no, I gotta stay in it when it's actually about to turn around, because they don't know what the leading information is, right? When it's going down, the same thing. They don't know if they should be dumping, or if they're too late to start dumping, because they don't have leading information, and they don't know if when it's going basically sideways, if they should be holding, if they should be running low time frame trades. They don't know what to do, because they don't have low time frame information that's actually good for them. They don't have any leading information that's good for them, because they're typically using traditional technical analysis. And I told you that we are going to see a continued movement of wealth from the weak hands, as they call them, which is really just another euphemism for the dumb money, right? People that buy high and sell low, to the strong hands, right? The smart money, the people who know how to buy low and sell high. And we are seeing that continue to this very day. We're seeing people with large stacks continue to stack, and people with small stacks get wiped out, especially if they're trading, or especially if they have to sell to meet bills or whatever, and they're not in a position to hold on. And this summer doldrums, if you want to call it that, which it hasn't really been dull, but if people want to say that's what it is, they can. The summer doldrums, effectively, are continuing to wipe out people who don't have the tenacity or the resolve or the wherewithal for whatever reason. They might just not have the means to hold on. So maybe they have to sell their assets because that's the only way they can get through this sluggish time. And it's really not sluggish if you're trading on low time frames. Again, there's plenty of movement on any given day on practically any asset. Look at, altcoins. Altcoins are chugging along just fine. You got a lot of coins that move 5, 10, 12, 15% in a day. They might move back and forth, but they've got lots of movement, and you can get some really sick gains trading to the upside and trading to the downside if you know what you're doing. If you don't know what you're doing, then yeah, don't trade. Learn how to trade first if you want to actually trade. Otherwise, if you want to just invest, that's a whole different story. But even then, you should learn how to invest properly, and part of that is learning how to read leading information that you don't normally have access to when you look at traditional information about investments and market investments. And the reason for that is because the powers that be in the financial markets, namely the big investment houses, large financial institutions, large banks, big HFT firms, etc., they don't want you, the retail trader, to have access to the kind of leading information that they use. Returns, right, on their investment. What are they really looking at? They're looking at the return, the log returns of investment. What do we look at in alpha trading? We look at the log returns of investment and everything related to it. The mean of the log return of investment, the standard deviation of the log return of investment, which is volatility when it comes to trading. We look at variance, which is the spread of data around the mean, which is another way of saying volatility. We look at entropy, we look at probabilities, we look at statistics. And that is why if you trade low time frame VEPs, as we call it, you really don't have any day without an opportunity, right? It just depends on your time frame and your position, your info, and your speed. As long as you can, as long as you have a decent position size, and you have good information, which you get from the alpha trading indicators and method trading, and you have good speed, decent enough speed to trade on an exchange, and you're trading on low enough time frames, you can make plenty of great trades, even in days that seem sluggish to the average person. They're not sluggish days. Bear that in mind. Anyway, if you want to learn how to do this, you can learn completely for free. We make our tools available for free. We make our volatility starter pack available for free. It's a free set of volatility indicators to let you learn the basics. And if you are actually serious about being a trader, once you've learned those basics, then you can get access to our Pro Premium subscriber package. Anyway, check out the link to the Discord, which is just at alphatradinghq.com/Discord. And hope to see you there. Happy trading.